In 2017, two Chicago community organizations sued Cook County, alleging housing discrimination against Black and Hispanic homeowners. To figure out how much homeowners needed to pay in taxes, Cook County would use an undisclosed system to determine how much every house in the county was worth, then tax homeowners based on that assessment. According to the community organizations, richer, whiter neighborhoods were underassessed, meaning they pay less in taxes. On the other hand, Black and Hispanic neighborhoods were being told their homes were worth more, making them pay more in taxes. Since then, the Cook County Assessor's Office has taken steps to publicize their housing data set and methodology for tax assessments. The difference between the market value of homes and their assessed value has improved drastically. But was it open source data sets and statistical models that led to an increase in housing equity? Consider when someone submits a mortgage application. This process used to exclusively involve verifying an applicant's income, credit score, assets, usually by a white underwriter. At the same time, a white mortgage loan officer would spend face time with the applicant to review whether they're qualified. Times have changed since, and so has technology. We now have software-based lending that optimizes a bank's ability to calculate the eligibility of an applicant in seconds, much like Cook County's statistical method for tax assessments. Surely mortgage approval rates and interest rates are now more equitable because of it. In 2019, researchers at UC Berkeley analyzed 7 million 30-year mortgages. In face-to-face transactions, they found higher interest rates and refinance fees for Black and Hispanic applicants compared to white applicants. But when Black and Hispanic applicants applied online, minorities still paid more, and the rates were only slightly improved compared to borrowing in person. The disparate rates for non-white applicants make sense for in-person applications, but why does it still persist when the bank is less likely to know the applicant's race? Why did Cook County's algorithm increase fairness, but mortgage algorithms don't? First, the underlying dataset Cook County uses contains features of the properties themselves, features like square feet, to whether or not the property is in a floodplain. But mortgage applications use previous mortgage calculations. If Black and Hispanic applicants with similar credit scores, assets, or previous housing were offered unfair terms, new Black and Hispanic applicants will also be offered similarly unfair terms. This accounts for some of the disparate outcomes. But even if you fix this, the deeper problem really stems from mortgage eligibility being built on a system that supports the powerful and hinders the marginalized. It's not technology that is flawed, but the very profit motive of private banking that filters those who deserve homes and those who do not. Many of the wealthiest, most diverse countries in the world have differing degrees of economic and social equality. But because of globalized trade, they all have similar levels of technology. So then what explains these differences? The clear difference is in the way their government is organized and how their policies distribute power to different groups. Unless the technology gives power to those without it or curbs existing power structures, only policy change through the education and mobilization of people can change our systems. Banks implemented mortgage algorithms to reduce the wage labor of mortgage lenders and underwriters to increase the margin of profit. This only incidentally reduced mortgage discrimination by allowing Black and Hispanic families to apply without having their faces seen by loan officers. Cook County implemented public tax assessment algorithms because community organizations mobilized and leveraged the institutions of media and the law. Because their tax assessment system became a social and legal liability, policies changed, and technology was one of the many tools used to reduce discrimination. Technology is not intrinsic to helping or hindering housing equality, or any inequality for that matter. But if put in the right hands, it can be one of the many tools to implement policies that can make a more equitable world.